All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for January 31st, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 329. So my name is David Kosmeter. I'm the creator of Timing Research, and today I have arranged for Wally Olopade, Alaina Nicole, Leslie Jouflas, and the option professor is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thank you, David, and thanks everybody for being here. We got a big snapback rally here today, and we're going to talk about where we think that might be going from here. I noticed on the S&P, the December lows were around 4,500. On the QQQ, around 380, and on the IWM for the Russell, around 210. And the VIX, the high in December, was right around this neighborhood. So it'll be interesting to see if this market can plow through these areas, which were former lows, and if that VIX can hold up at the 25, 27 area. So we'll see what's going on, because this is a pretty important area somewhere around here. And so we're going to get some professional views on what's going on. Okay, today we got Wally of Right Side Trading, and we've got Alaina of Options Bay, and of course we got Leslie of CMT of Trading Live online.com. So let's start out with Alaina. A little background on yourself, Alaina, and what's going on at Options Bay.
Yeah, thank you guys so much for having me. But I have been trading for over 2 years now. It's kind of gone by fast, but we just have a community of traders. There's all different levels of experience, and we just come together and trade together. We do like live classes and things like that. And I'm predominantly a scalper, but also have long-term. So I'm really excited to be here.
Great. Thanks a lot, Alaina. And we'll be interested to hear your take on what's going on now. Leslie of tradingliveonline.com. You've been speaking quite a number of times, but could you introduce yourself to the people who are not aware?
Sure, I'd be happy to. I'm Leslie Jouflas at Trading Live Online. I've been in the markets for over 25 years. I trade primarily the S&P 500. And I've been teaching and trading and developing trading strategies, as I said, for over 25 years. So I'm happy to be here today. Thanks for inviting me back.
Sure. And it's interesting to see two perspectives, someone who's been trading not as long time as yourself and a shorter time. And so different perspectives is always interesting to see.
Sure
next,
is,
yeah, you bet. Next up is Wally of RightSideTrading.com. Wally tries to see if things are actually going in a certain direction before he commits. So he's a little bit of an interesting, another diversity to the group here today. Wally, a little background on yourself and what's going on Right Side Trading?
Absolutely. Well, thanks first and foremost for having me on the call again. But yeah, so I have over 17 years of accounting and finance background. I am an awards-winning speaker, fintech entrepreneur, and stock market expert. I focus more on quantitative and technical analysis than anything else. And so, like you said, the goal is to make sure that we are on the right side. So for that reason, we're more swing traders and long-term traders. My goal is to make sure it's like, are we bullish or bearish? That's my main thing. It's like, when is the trend turning bullish? When is the trend turning bearish? And make sure that we're on the right side of that.
Yeah, because lately we've had very strong rallies and they have fizzled out, and then we've had big drops and they fizzled out. So in this kind of environment, you could get chopped up a little bit if you're not careful, right?
Absolutely. Absolutely. And making sure that you understand where the ultimate trend is going is important.
Yeah. Because when the VIX goes up towards 40, obviously it's like a ball coming off of the Empire State Building. It's going to bounce around and oscillate, and those swings, are not going to be really a trend at that point until, it settles down a bit, right?
Very good. Yeah, you hit it on the nail. Absolutely.
All right. Well, here's our question of the day on Mondays, Monday morning quarterback, I guess. But what we're talking about here is, where will the VIX be between the S&P be between today's opening and Friday's close? I always use the SPX because that's the cash index, but people like to use the E-mini. If you're using the E-mini, obviously you take about 10 points off of what I'm talking about. But right now we opened up at 44.31. And we are up in the 44.80 area now. So starting in the same order, Alaina, from 44.31, the opening today, how do you feel we'll be on Friday? Up, down, sideways? And what's your conviction amount? Is it 50-50, 60-40, what?
This is kind of a tough one, but I do think we're going to be lower. I hate to be the bear, but I do think we'll go lower. And I think that also really depends on big tech on the earnings this week as well.
Okay. And of course, I'll come back to you with some of your indicators that are giving you that feeling.
Okay.
But you're thinking lower by the end of the week, and your confidence level percentage wise is?
Probably 60%, I would say.
A little more than even.
Yeah.
Yeah, I got you. Next person up is Leslie. Leslie from 4431. How do you see it?
You know, I think we're in a big range. So I think there's going to be a lot of testing up and down. So I think it's hard to call with the type of market environment I think we're going to be in this week, up or down. We're coming up for the type of patterns that I use right now and some sell patterns. And I think they're going to get some retracements back to the downside. I don't feel that we're going to get new lows right now below those lows, but I think we're just going to get a lot of testing down and back. So I just really can't say up or down. I think it's just going to be testing.
Yeah. So there's really no conviction one way or the other, because it's going to be very data dependent. And of course, it's liquidity dependent. If people stop buying, the thing could fall pretty fast.
Yes.
Yeah. One thing I wanted to ask you, Leslie, is, you know, I have a little bit of a hope, and that's not a strategy, right? But I have a hope. I have a hope that we make a new low, but the RSI doesn't make a new low, and we have a nice divergence. So when we get to your talk a little bit about maybe what's behind the curtain on your feelings, maybe we could look at an RSI on the S&P and see if you see what I see, which could be a deal where maybe we could make a new low, but if the RSI doesn't, that would be a fantastic place to maybe take a shot.
Let's do that. I would love to talk about that.
All right, Wally, how do you see the end of the week here? We're at 44.31 on the opening, and on Friday, Viernes, what are we looking at?
So I see the market higher.
Okay.
We put in a bottom.
Yeah.
The data that we see, we put in a bottom. And so I'll be shocked if we don't reach all-time highs with the way this is going now.
Right.
So by Friday, definitely higher. Next week, even higher than that. Yeah. And work our way all the way to new all-time highs.
Yeah, there's definitely a case to be made that 39 on the VIX is a excessive reading, and 42.21 was a get me out of everything type of price. And if that's in fact true, then what we're seeing here is not a rally that will fail, but it'll be a wall of worry deal. And as these earnings come out, they're going to drop kick these people higher. Is that pretty much how you're thinking, maybe?
Very close to that, close to that. But then also just since Monday, after that big long wick that we saw, that's a huge buying pressure. Yeah. Usually that's a very telltale sign that the market has bottomed out. And so we were watching this all last week just to make sure that it doesn't go any lower. Right. And you'll see that except for Friday where we had a dip below the lows, we've been making higher lows, basically. Yeah. So,
they definitely tried to press it when they took it back into the 4,200 numbers, and it didn't last there very long.
It didn't last that long. And you look at the VIX did the exact opposite, right? Yeah. So the VIX topped out at the top on Monday, and it's been going lower ever since then.
It is hard to get the VIX above 40 unless you're going to have an 08 or you're going to have a March of 2020. So, you know, the 39 reading is definitely an excessive reading. Unless, of course, you're into an abyss. And there's really nothing on the environment you would think that would turn it into the abyss, right?
Well, yeah. And, you know, unfortunately for us, I mean, fortunately or unfortunately, the way we look at it, we only focus on the data. And the data now just shows that, you know, we put in a bottom, we put in a top on the VIX, we put in a bottom on the market. And the funny thing, it's not just the S&P 500. We put in a bottom on the NASDAQ, we put in a bottom on the Russell, we put in a bottom on the Dow. Right. So when all these indices are doing the same thing, this is something we call a market in unison. When the market is in unison, I say, this is not the Reddit people, Wall Street bet people buying one stock of GameStop and trying to like move it.
No.
When the whole index, when you talk about the whole index, the Dow, the Russell, the NASDAQ, they're all moving at the same time. That tells me somebody knows something. And it's usually the institutions behind this.
No, and it might also be that the Fed is going to go at a very slow pace as opposed to what people are banging about, this fast pace that they're going to do. And if they go at a very slow pace, those tech stocks are not as scary as they were when people were thinking it was going to be a fast pace.
I totally agree with that. I think that's the confidence that we're beginning to see here. It's like, wait a second, if the Feds are not really going to do anything that's going to spook the market anymore, it's like, let's get back in. And that's what we see. We're beginning to see the beginning of a new bullish trend.
Yeah. And the 2-year yield going up 50 points in a month is doing some of the short-term tightening for the Fed anyway. You know,
Totally agree.
yeah, the yield going up like that. And they don't want it to invert, and it's already at a 60 differential. If it gets to a 20 differential to the 10-year, that's when the recession drums start pounding. And I'm sure they would prefer that not to happen. So 60 differential might be where that stuff slows down a little bit.
Yeah, no, I totally agree with you. And I think this is definitely all good news that's going to support this market going higher, honestly.
All right, let's find out what's behind the curtain, you guys. Starting out with Alaina. You're thinking, there could be a sell-off going into the end of the week. And what are some of the reasonings behind what you're seeing, both technical or fundamental or both?
Oh yeah, so I have been studying just some of the chart patterns back in 2008. And I do feel like we're kind of seeing a little irrational exuberance here. There's a lot going on with between COVID and inflation and, the rate hikes and even Russia, like in the Ukraine situation. So today I noticed we are on low volume. So I do see that we've rallied quite a bit here, but we're doing this on some low volume. So I'm just really curious to see how sustainable this really is. On the SPX, I'm looking at the 4-hour now, and it looks like the 50 is trying to cross down below our 200 EMA. So it looks like it may want to retest that, but I just don't feel bullish on this at all. There's just way too much going on. And yeah, that's pretty much where I'm at. And like I said, I'm very predominantly scalping short term.
Yeah.
These pumps just really don't seem sustainable to me at all right now.
Yeah. Because like I say, the VIX can sometimes go into a range of say 25 and 40 and go back and forth. And that's a scenario that would fit into your plan.
Yeah, and this daily, it's really oversold. So I mean, I would expect to see a bounce here. But even if you just drop up to the 5-day and just open up that time frame a little more, you can see that the RSI here still has some ways to come down some more.
Yeah, yeah. This Norway Wealth Fund, which controls 1.3 trillion, the CEO of that was saying that he thinks this inflation is definitely permanent, and he's reciting stuff like housing costs and trucking is now going crazy, and then the freight rates, and then of course energy and commodities, of course they're already gone, and the cost of physical metal and companies like IKEA jumping prices 9%. So, he's not one of these transitory guys at all. And, he's managing 1.3 trillion. So you would imagine he has some data behind his opinion,
Oh, yeah.
Yeah. All right. I got that one. So let's turn over to Leslie. And Leslie, what are you seeing, as far as reasoning behind your idea that we could be going back and forth in a choppy environment?
Well, generally, the choppy environments are when you start to see sharp up moves and sharp down moves, sharp up moves, sharp down moves. The market is trying to figure out the direction that it wants to go. And I think with this market, I think for me, what I look at is the price levels. Where has it been? Where's the support? Where's the resistance levels? The main support area right now is 42.12. This is using the S&P futures.
Mm-hmm.
The Dow, interesting, is in an enormous range. It actually did not break out of that range with this down move. It just moved to the very lower end of it. So there's a really interesting pattern. It's called a reverse descending triangle. And when I put this pattern up, when I was doing my what's called my weekly market setups for my subscribers this last week, and I saw this pattern, and it's a rare pattern. I looked it up in my 1935 H.M. Gartley Profits from the Stock Market book. And when I drew the trend lines in, the highs from early January are the highs of where this trend line is. And then the lows that we hit just a little bit later in January is the third touch of that lower trend line. So reverse descending triangle is when you have a flat bottom and then you have an ascending trend line on top. So the Dow is in a huge range, and it's been there for quite a while. So it's just a matter of following the major support and resistance, I think, right now.
Mm-hmm.
Now, it'll say, like Wally says,
do you see anything going on with this December low area? Because I'm noticing that when we broke the December low is when you accelerated to the downside. meaning
Yeah.
that was really the get out of town thing. And so if that was the support that broke, as we've come up here today to 44.90 area on the cash S&P, is it a situation where that point there could be of any importance to you, either on?
Yes, absolutely. Well, I think we talked about that area where that would have been the beginning of January, where we had the first very long candle down, and then the market came back up to just about 50% of that candle, retested it and turned down and made those lows down to 42.12. So that area of that retest, that 4,700 area, is an important resistance level. I believe if it gets above there, yeah, I think Wally is absolutely right. We're going to new highs, but I think we're going to just be seeing some testing back and forth of these levels. Right now, there's a sell pattern forming right around the 4,500 area, give or take, some points on either side. This is called an ABCD pattern. This is a Gartley, it's called a Gartley pattern. It's a retest pattern. And now this, the expectation from this is retracement back down. I wouldn't expect it to break the 42.12 lows right now, but I think we'll get at least a test, a good retracement back down on that. So again, I just think we're going to be testing the important resistance and support levels. You can see right on the chart, you can see the clustering before today, the last few days where the market was just clustering. You had some open and closes around that same area. And so now we can kind of clearly see that there's even important support above that 42.12, where those last open and closes were. Those are important. The tails aren't as important on those right now, but those open and closes are.
Yeah, I'm sure it looks to everybody that tail that occurred during that big drop to 42.12 or whatever is a tail that looks like it would hold up. But if you go back just to the month prior, there's a big tail there between 46.40 and 45 and change. And
right,
yes, it did.
I mean.
Yes, you got a bounce, but it wasn't a bounce that lasted.
Yeah, and again, it does have the appearance of a potential five wave. I'm not a big Elliott wave technician, but I can see potentially what's a wave 1, wave 2, and then our large drop, wave 3 down, and this potentially a wave 4 to the upside. So I think we're just really going to have to kind of see what unfolds here.
Yeah, I was thinking out loud also is what's the likelihood of going up to new highs in an environment where, like in other words, where we got the drops before since October, the blue moving average was either rising or kind of rising the whole time. And so obviously, a correction can be very short-lived in that kind of a technical situation. And the RSI was above 50 pretty much the whole time, and then now we have an RSI that seems to be languishing under 50. And we got these averages like the blue one coming down. That would not increase the probabilities that just magically you're going to go to 4,800. Wouldn't you say that?
I think it would need a little work. The market needs some work of testing back and forth to do that. And the RSI was certainly up at the high, showing signs of kind of deteriorating to the bearish side. And it had changed ranges. I've talked about this before on this program of the RSI changing ranges from bullish to bearish, bearish to bullish, and it changed ranges from bullish to bearish. And that RSI, as price comes up, is going to be testing what are now sort of resistance areas in the RSI. So I'm going to be watching that really closely.
Yeah, I was looking at a chart on earnings too. Last year in Q1 and Q3, earnings were up over 30%. And Q2 of last year was up like 80%. And now we're going to be looking at earnings in Q1, Q2, and Q3 that are much lower growth than they were last year. And GDP was like 6.9% in Q4, and the Atlanta Fed is looking for GDP in Q1 to be at 0. So that's quite a bit of a difference from last year to this year.
Yeah, that's a big difference.
Yeah. Well,
Yeah,
let's see what Wally is seeing, because Wally is following the numbers, and the numbers are definitely improving. Obviously in this environment, the question is will they stick? And so, Wally, what are you seeing?
So yeah, so I do believe that it will stick. I've studied, when I got into the stock market, it was in 2012, 2013.
Right.
The reason why I got in was because of the financial crisis that happened in 2008. Now,
Mhm.
when I got in 2012, I didn't know that the market had actually rebounded. I still thought we were in a recession. And so for that reason, I spent, pretty much the next 3 years studying market bottoms, because I felt like I wish somebody had told me that the market had hit bottom in 2009. So here I
Right.
was 4 years later, still thinking the market was in a recession, not realizing that the market had bottomed. Needless to say, I've studied and studied and studied market bottoms over and over and over again. And what we're seeing right now is the typical situation where market bottoms out and is ready to go higher. The volatility that we've been seeing all week, last week, is very, very typical to when the market is bottoming out. And now I don't have official theory, but my theory is, because I always question, why does this happen at every major bottom, is that my theory is that, maybe it's a rotation of sectors that's taking place. They are taking money out of certain, sectors and industries and putting it back into new areas where they believe that the market is going to go higher. So we saw how technology had been doing really, really bad for quite some time, and so many different sectors were doing bad. But now it's like all last week, because if we're talking about big institutions moving money, they don't do that in 1 second and in 2 seconds. They need time to really shift things around. Now, that's my theory. And so that's why the only explanation I can have as to why this happens, and it would typically take a week to 2 weeks, where you'll see that shuffling back and forth, back and forth, back and forth, which is where everybody starts panicking. Oh, market's too volatile, market's too volatile. But I said, when the market is volatile, it's almost kind of like the eye of the storm, and it's like, just be patient, wait to see where they go. And then when the breakout occurs, watch to see where the breakout occurs happens to be. If it's at the upside, they're reversing back to the upside. If it's to the downside, we're going back further. Today, I know the day's not over yet, but the way the price is acting, as long as today ends the way it's looking right now, which chances are very high it's going to, then that tells me that the reshuffling has already taken place. They've already done, and now they're positioning themselves to start buying in discounted stocks. I mean, there's so many stocks that have been discounted from the January drop, that now they're just ready to start acquiring more and more and more.
And their PE ratios are much more reasonable.
Much more reasonable now, exactly. And so I see that going higher. Now, you mentioned something about the blue line, but the one thing that we're all missing is we're not looking at the bigger picture. If we go to the weekly chart, look to see where that blue line is in conjunction with price, and you'll see that we're literally bouncing off that blue line that we talked about. Okay, so to me, again, where the advantage of seeing what the big institutions are doing is, big institutions, when they buy, they are buying more in the sense that they're looking to buy stuff that they can hold for the next 2 weeks, 2 months, 2 years, so to speak. Does that make sense? And so a lot of this stuff that we're seeing now, to me, just like, this is a great time for them, whatever it is, whether it's the Feds, whether there's something else out there, they realize it's safe enough to start buying again. Yeah. And that's why we're seeing what we're seeing right now.
When you get a big crack in the market, you throw the short-term charts out the window, and then you start looking at the long-term. And the ones that I was looking at, there was 3 levels: 43.35, 3,800, and 35.25. So we obviously made a big test of the first 1-year SMA on the long graph, and it got broken, but it certainly did not last. And we're well above 43.35 now. So if we continue to do that, we probably won't go to the 3,800 or the 35.25. And then these guys you're talking about who have to place money, they're going to probably feel comfortable getting in.
Exactly.
So you're right. The longer term graphs are still pointing up. The moving averages are still rising. The 1 year on the SMA on the long graph at 43.35 did get blown out. But again, how long did it stay under there? Not very long.
Not very long.
And so if we got back underneath 43.35, then I would definitely get a little bit more bearish on the whole thing. Turnaround Tuesday is tomorrow, turnaround Thursday is coming up, and we got a lot of earnings coming out. I guess it'll come down maybe to, is Apple, Microsoft, JP Morgan, and all those guys, did they give you the best you're going to see? And then basically these other people are going to be much more moderate in their returns and stuff. That'll be a key as well. But you can't fight the tape, and the tape is definitely trying to turn up. There's no doubt about that.
I love what you said about you can't fight the tape. Jesse Livermore, a lot of people know who he is. You know, he said something very similar to that. It's like, don't fight the tape. You can't argue with the tape. And so at the end of the day, you can argue with opinions, but you can't argue with the tape. And I guess the fact that, look, nobody can predict tomorrow. I totally get that. Yeah. And so like you even said, what if, let's just, because we have to consider all sides. What if, things just turn bad and it kind of goes lower? Because you mentioned the lows of December. That's a point that we have to definitely pay attention to.
Yeah, we're right almost there. So that's why you got to be careful. And you got turnaround Tuesday coming tomorrow. So those would be two things to be a little concerned about.
Absolutely. So you have to pay attention to those things. So don't get me wrong. You have to pay attention to that and make sure that, okay, let's watch and see if things start reversing in those areas. You have to question, okay, maybe something bigger is going on that we're not seeing. But absent of that, then I'll say, look, right now, it looks like we're going all-time highs.
Yeah, the two big elephants in the room that would change your scenario, and the reason maybe it's trading under the blue line a little bit, is because the inflation is very high. And if it continues this high, the Fed is not easing anymore, and they're not making accommodation anymore. They're taking it away. And one of the reasons they have to is Japan and Europe played this game of zero interest for a very long time, but they have no growth rates because the demographics of their countries stink. And our 30 to 50-year-olds is a very, very large population where they make a lot of money during that time. They spend a lot of money during that time. They create a lot of families during that time. And so the Fed may not have the luxury to play the old giveaway zero interest. And that's why, that's definitely a wild card if you're bullish that has not been fully, brought into the market, I don't think. You know what I mean?
I totally agree with you. On that.
All right. Well, let's talk about what looks good and what doesn't look good as far as maybe some individual stocks or, some potential trades out there. Alaina, what do you got as far as some things that you're looking at that you think might be very interesting here?
Yeah, so I think it was last Monday. I was on here with you guys and we were talking about lithium, but ALB actually recently got upgraded. So that's one that I have been watching.
What's the symbol again?
ALB. I think it's Albemarle, if that's how you pronounce it. It's a lithium play.
Yeah, I got it. It's 218 bucks a share, both. Yeah.
Yep. So I like them long term. I think they ripped last year, so I think it did need to cool off a bit. But I absolutely think this is a nice one to look into for the long term, for sure.
And you certainly are getting it with a double low around 195, and so and it got above that 215 area, I guess, is a good thing.
Yeah. I'm super bullish on lithium moving forward, especially with EV and just them penetrating the auto market. I think they'll be really good for the long term.
What about LAC? Anything there?
Oh yeah, I've got I actually have a little list of lithium plays, but yeah, I've got that on there.
It's a little less juicy price wise, huh? As far as 26 sounds a little cheaper than 218, right?
Yes, and then also what was the other one I had on here?
Is there another one, SLI, that's supposed to be a big deal?
I've got PLL. That was my other, and then LTM. Let me pull up these dailies here. But these have all, they all really ripped last year, like the whole sector. So like this little pullback is really to be expected.
Yeah.
But I do like, again, I do like the long-term chart on this. So I think there's a lot of upside potential here.
Boy, this PPL has a really good formation because it had a run up and then a pullback that didn't take out the low. And now it looks like it's, it looks like it wants to, well, obviously in the last couple of days, it was a perfect time to be in that one.
Oh yeah.
Yeah. But this SLI was highly touted by some of the newsletter writers that are out there. And this isn't working quite as well, but it's obviously very cheap compared to the others too. So it's in the lithium deal, but it doesn't have the legs of the ones you mentioned. That's for sure.
Oh yeah, I will add this to my watch list. This one I wasn't aware of, but I do like the price point. I'm not mad at it. So this is
hey, listen, anytime you're buying something for $6, it's like buying an option, meaning the most you could lose is $6 and it lasts until the company goes out of business, right?
Exactly.
Yeah, I always like that. Like when Freeport McMoran got underneath 10, come on, what are you going to go out of the copper not going to be used again? You buy it there and you just sit it and forget about it because it's like a long-term option that never expires,
Yeah, exactly.
All right. Is there anything else on the win? Because that was a great one. Those lithium ones look great. What else? Do you see anything else?
So right now, like I predominantly do trade like the SPX and SPY.
Okay.
So yeah, that was the other thing that I've really been looking into was lithium.
But with regards to the SPX, I mean, do you see a trade developing here? I mean, are you monitoring this, say, 4,500 area as a possible place to get a sell off or?
So I was looking at like the lower time frames and like they're
Mhm.
really overheated. Like they're really
Yeah.
overheated. We have like this wedge forming, but again, like I said earlier, we've got this like irrational exuberance. We're not moving on heavy volume, so it's
No.
like it's just getting pumped up today. So I don't, like I said, I don't think it's sustainable. I just think we need a pullback. It's really been ripping since about, oh goodness, let's see. What is this guy? Let me go back to my.
And like I say, I'm looking at the graphs. I mean, is any way you'd hit it around this 44.90 area on the cash and maybe think it's going to roll, or would you look for some kind of a crossing of the some moving averages or an RSI doing something before you act on that?
Yeah, I would definitely need it to pull back a little bit first. But on the long term, it does look like it's coming up. This RSI has been coming up on the daily. So I could see like the long term, but again, with all these earnings this week, it's really risky to me to get in right now.
Do you use 15-minute or 30-minute graphs or anything like that? Because if you're using that, you might have got a sell signal already today because it looks like it's trying to roll over right now.
Yeah, so for my trades, I'm typically the highest I'm going for like direction is like a 15. And then I'm usually executing on like a 1 or a 2. So I'm really, really short term.
On the 15-minute, has it given a sell signal here up here?
It's been trying. It's been overheated all day, actually.
Yeah, because like I say, I can see the high. Maybe don't have. Yeah, I'm seeing like well, if you put a real short-term graph up there, I wonder if it has turned over because it went up to that 44.90 area, and it does look like there's been some selling against that. So
yeah,
let's see if we had a 1 hour there. Yeah, not yet. 5-minute. Maybe let's see what 5 minutes are doing. Yeah, let's see in a little bit. Yeah, we'll have to see. I guess where they take it home and what Turnaround Tuesday does is going to be very important. Huh?
For sure. Sure.
All right, let's switch over to Leslie. Leslie, what do you have out on your radar that you think might be an interesting thing?
Well, two things. One from just the conversation from a few minutes ago. I'd like to look at a SPY chart monthly and point out a couple of things, and then I'll tell you the areas and the patterns that I'm looking at for some shorter term sells that are coming up. They're getting pretty close.
That divergence looks like there's some more to come, huh?
On the SPY
RSI.
Yeah, it does. And if you can expand that out a little bit so we can kind of see those bars. Oh, other way. So make them bigger. There we go. So this is this big candle that we're not quite closed for the month, and the bulls have been able to push that price back up close to about 50%, it looks like. But if we look back over the last couple of months, if we look at where the open was from, let's see, from December, I think the next bar over, and then we look at where the open was from, I think, November, we can see that that price area in there, that's right around 460-ish area, that's right around the 50% of the high to low of the candle that we've seen monthly here in January so far. So that's a big resistance area. This chart does not look bullish to me right now.
No.
But I would change my mind. If we get back up above where that open was about 474-ish there. But otherwise, we're in a big range. If you take the lows from, let's see, 1, 2, 3, 4, 5 candles back, about 428 area on there. We're in a big range right here, but I'm not seeing anything that's looking bullish, looking long term right now. Right now I'm looking at testing, and we have to really watch the lows. There have not been any really measurable retracements since the 2020 low. And I think if we break the recent lows from this month, then we're going to see some retracement levels, maybe 0.32 to 0.50 from the lows from March 2020.
And what does that correlate to price? 0.32
Oh, well,
A2?
let me tell you. Hang on
Yeah.
one sec. Put my little
Because that would be
retracement.
helpful.
The 382 retracement from the March 2020 lows to our highs coming in at 380. And the 0.50 retracement comes in at 349. If
Yeah.
it's a bit deeper retracement to the 618, then we're looking at 318, and that's back into kind of a retest area from where we fell off a cliff in 2020.
Yeah, that's pretty
So-
much where the 3,800 and the 3,500 comes in on the long-term charts that I'm looking at. In other words, if there's a full scale reversion to the mean, then those numbers come into play.
Yeah, and it's going to be a good buying opportunity.
Oh, no, it's gonna be fabulous.
So yeah, so
No, because like I say, like we were talking about the demographics. I mean, this country has got operating leverage in all their companies. And with these people, buying homes and mobilizing their lives, the next 5 or 10 years has a very, has a very good, bright look to it.
Right. Yeah. So, it wouldn't be a terribly bad thing to be able to come down for a little bit deeper retracement. And according to the monthly chart, if it hits a 38250 618 even, the more bullish retracements, of course, are the 382 and 50. In very strong markets,
Right.
generally the retracements are going to go to the 382.50.
Right.
And so if it, like say, hits that 382 and really bounces up, we're still in a really strong bull market. But right now, looking at this monthly chart, I'm not seeing those new highs. But however, one of my philosophies is you don't need to know where price is going in order to make money. I monitor the levels, I trade off of those levels.
Right.
And that's what I'm seeing on the monthly chart right now. So all we need to do is just watch those recent lows and see how those test.
And it'd be very interesting to see what happens in Q1 here, because Q1 is where we're going to get a lot of data. The Fed's going to probably make their first decision, and the market will probably start extrapolating a little bit further down the road based on this first quarter.
Right. So yeah, a lot of factors coming in.
And the estimates on Q2 earnings are quite low compared to last year.
But yeah, you'd mentioned that. So that will be interesting, interesting too to see. But anyway, regardless, they're great trading markets. What we have now. So
there's no doubt about it.
Either direction, they're great.
I mean, 50-point, 100-point S&P moves are nothing now.
Yeah, I know. You even look at a 5-minute chart, and some of these, bars on the 5-minute chart are 30, 40 points on one 5-minute bar.
And when we were up at 180, it looked like a pretty reasonable thing to look for Apple to go back to 155, 157, which it did. So you had an opportunity to sell up in the 180s. You had an opportunity to buy in the 150s, and now we're at 170. So there's a classic example of, in the last 30 to 60 days, in one of the, if not the biggest company around, you had an opportunity to make a whole bunch of trades in there.
Yeah, I see a nice ABCD buy pattern on Apple from the highs, and then down where you see that next retracement up, and then that second leg down. That's a nice ABCD buy pattern. That's a Gartley buy pattern.
It's a scary company because they have so many people engaged with them. And then if they came out with other products, that all those people could engage in, the revenue that could go into the company would be tremendous,
Yeah, they need more revenue.
Well, I'm trying to say, just imagine if they had a car. I mean, if Tesla makes a car they like, imagine if Apple went with Mercedes and came up with a car called the Apple Mercedes car. I mean, and then if they go into the cloud and take all that business away from people or whatever, and payments, imagine they took everything away from PayPal and Square and everybody else.
Right. Yeah. It's right now that, those lows right down around that 155 down below, that's not going to be a healthy thing for Apple. No. But right now it's, I think it's going to get some testing back and forth as well. As long as it stays in that range, doesn't break that 155, I think eventually we'll see it up at new highs. But right now, for shorter term on the S&P 500, I've got some sell areas coming in right about we're almost there. Just right around 44, almost 4,500, and then just a bit above 4,500, 4,510 to 4,515-ish.
I was looking at the the transportation index, and I'm hearing about how trucking costs are going through the roof. You know, the IYT is the transportation thing. Is there, you know, a real bargain here? Is this going to go back to the mean a little bit towards 265, or what do you think?
Well, let's take a look. It's got a nice bounce off of those
First of all,
lows
it's
there.
very discounted, which is a good thing if you're trying to buy. And the news on it is not like these companies are not making money. It sounds like they're raising prices. And all that stuff in the harbor's got to get someplace somehow, right?
Yeah, it's got, again, to me, it looks like this is going to be in a testing, you know, testing type mode for a little bit of while, but you've got some really beautiful support and resistance areas to be working with. The, you know, the 280 highs up there, if it breaks those highs and gets a nice strong close above that, then that's going to be, you know, just sailing to the upside, and conversely to the downside below this 245-ish area, 242, it's not going to be good. But I think until then, it's got some work to do to get back up to that 280. I would be looking for, see if we get a bigger bounce to the upside, and then be looking for a nice retracement buy pattern against that 242 area.
You're not much of a believer that there's a quick fix like there has been. In other words, every drop we saw in the last how long, it was very short-lived and right back to a new high. And you're not seeing that scenario in this current environment.
I'm not, just from what I'm seeing on the charts, but I could be totally wrong, because
things change.
I am.
Well, I mean, obviously, if the data change, in other words, if we start trading on this thing at 270, 275, you know, obviously the winds of change are blowing much further than you thought, and then you change accordingly.
Exactly. You know, that's what I do. I trade on pattern recognition. The patterns are bullish or bearish patterns, and so they, like, you know, at the highs there was a very bearish pattern, so that pattern puts me in a bearish direction. You know, we hit the support, and then, well, we had a lot of testing up and down. Well, now, right now, it's just moving up to a pattern that's probably going to test some of these prices down to the lower side. When the market takes such a big hit, sometimes I don't see that we're getting a V spike reversal off of these lows, because we wouldn't have spent the last few days chopping back and forth. It would have just taken off like the space shuttle, or whoever else, Amazon's shuttle, whoever's shuttling up to the moon these days. And I don't see that that's happening right now. So that leads me to believe that we're going to be seeing more testing back and forth.
Well, the other thing is you don't have to buy the bottom. As you can see in the October, September timeframe, you know, it was under the blue line. And if you waited until it got back above the blue and the yellow and blue crossed, there was still plenty of room for you to make money, as opposed to trying to buy while they are in a not as positive correlation. And then you sweat bullets the whole time.
Right. Yeah. It's just what, you know, I'm on. And if I see a good buy pattern on here, I will certainly let you know. But right now, I think we're just in a ranging mode. And I think the YT, if you look at that on a weekly chart, you can see that it's in a big range. It's just in a big range. So it's going to be going back and forth, you know, testing here. A breakout above 280 is, and there's nothing wrong with buying, you know, breakouts to the upside and waiting and having some more patience there. Sometimes in these big ranges, right around that middle area, is you can get some early clues as to the direction of that breakout, but I don't see that yet.
And even here in 2019 to 2020, you can see it was choppy. And if you really waited for an actual break with a crossover stuff, you caught a lot big move in that March drop. And you'd gone through a lot of frustration before then.
Right. I think we call that whipsaws.
Chop. All right. Well, we got about 15 minutes left. And I think what's important now is to go over each of you guys, what you do for the investor, and a little bit more about the services you provide and what you're trying to actually bring to the table for investors. So let's start out with Alaina. And Alaina, you know, just explain a little bit about what's happening at Options Bay, and, you know, what value you bring to people that you think, is something they should check out.
Oh, yeah, thank you. So we offer, we have live classes. We do group mentorship classes every Sunday. We do pop up live trading sessions. And then we also have a more hands-on package where we're literally walking you through step by step, and just teaching you our strategies. We're there to like really just guide people who are like brand new. But my business partner, he's been trading for almost, I think it's over 10 years now. So he's a lot more experienced. He's like my mentor. So he brings a lot to the table as well. But yeah, we're just really like an all around, long-term, short-term. We just want to help people get into the market. It's a huge thing, especially for women.
Yeah, you've got a very good empathy for the different type of investor. Your partner with the 10 years, obviously has more experience under the hood, but your experience has been jump-started because of your association with him. And because your experience is not as extensive, you have empathy for the people that aren't.
Absolutely.
And I think that comes across, and that's why, people feel very comfortable discussing stuff with you, because, they feel like you've been there and not that long ago,
Oh yeah, it can be overwhelming in the beginning for sure.
Yeah, it sure is. I think it's great. So anyway, yeah, that's good. Leslie, again, you have a lot of different services. And so why don't you discuss some of them? Because I think you actually address the inexperienced through the sophisticated, right?
Yes, I do. I actually deal with a lot of traders that have been in the markets for a couple to a few years, sometimes even a little bit longer, and they've gone through a process of, a couple steps forward and a few more steps back, then some more steps back, then a couple steps forward, just really around in circles and circles. Finding consistency in trading can be a very elusive process. And I think that it's a very personal process, and it's the actions that traders are taking that are probably costing them the money, that are putting them into an emotional cycle. If you go to my website, Trading Live Online, the first thing you see is, you're going to see it says at the top, master yourself, master your trades. And I am not a believer in getting rid of your emotions in trading. I just don't, the 25 years I've been trading, I don't think that's possible. But I think if you develop a relationship and understand how different emotions are affecting the bottom line of your trading. And I have methods when I'm working with traders to find out which emotions are kind of interfering with their goals. And then we take steps to work with that. And it's usually within a trade plan. Most traders don't have a written trading plan, and that's just always going to be a recipe for not succeeding in trading. You have nothing to measure your results from unless you have a trading plan. So I help traders. First of all, I teach pattern recognition. These patterns have been around since, the beginning of chart analysis, and they still are around today, and they will continue to be around because they form on investor emotions. And so that's what forms our price patterns. And so I teach specific patterns that are consistent patterns that show up on all time frames and in all markets. Like I said, they're bearish or bullish patterns. And I help traders develop trading plans. And then I actually walk through with them, the ones that are on one-on-one with me. I walk through them and I evaluate every single thing they do in their trading to help them move forward.
Now, are they going with different objectives? Because people have all different kinds of money, and
Yes.
do you find that you're telling people, okay, for trading, you'll take this X amount of dollars out of your portfolio, and that'll be called your budget, and then you start developing a plan of discipline around that budget?
Well, actually, generally, traders that come into the markets are probably trading too much capital to start with. You should really be, my opinion, starting with a small amount of capital, because you have to learn how to lose in trading. And if you can learn how to lose efficiently in trading, you want to do that on the smallest amount of capital. You don't want to do that on your largest amount of capital. And believe me, there are so many little puzzle pieces to go into getting that. I really cannot tell anybody how much capital. I generally work with them people think simulated trading is of no value. I wholeheartedly disagree. This is where we can uncover what's happening in the trading at no risk. And the same emotions that come out with real money will come out with the process that I use in the simulated trading. So from there, we go we step slowly into live trading with real funds, but we have such a strong foundation to work with that if there's issues, we can move back. We know what to look for. But I think traders would probably do much better starting out with a very small amount of capital, but you still have to have a written trading plan. There's just no two ways about it.
Yeah. And also you have to remember the leverage involved. If you're working with Google, every time you would buy 100 shares, it'd be almost over $250,000. If you buy one E-mini S&P, you're at $25,000. And so you have to remember the leverage factor, because again, one contract on some of this stuff is a pretty good amount of money.
Well, that goes in with, I teach trade management along with risk management, which includes their money management.
Yeah.
And so there has to be, with the trading plan, those pieces have to be with it. I have a course called Mastering Pattern Recognition that walks them, it's a 12-hour plus course, walks them through from beginning to end, teaches the trading setups, but also then goes into how do you develop the trading plan and the trade management and the risk management with it. You can't go into trading without all of those pieces, but you have to also be able to test what you're doing. And that's a step that a lot of traders don't understand how to do. It doesn't have to be complicated.
Right.
But there has to be a process for it. And you're right, the leverage can, a lot of traders I work with, especially if they're newer, they will be so over leveraged. They'll have way too many open positions. And because if everything goes, it's great if everything goes in the right direction, but when everything goes south, that can be a recipe for a blow up.
And too many markets trading would be another issue. And maybe over trading would be a third.
Yeah, I think you can focus on one market and do well. And you write into your trading plan how you're going to increase the leverage. At what points do you do that?
Yeah.
I think it's a mistake for most people, unless they have a trend trading type of strategy,
right?
To be all over the place. If you're, a swing trader, short-term trader, then I think focus is super, super important.
Do you try to get into concrete entry and exit points? Because, emotion also comes in from, it'd be like getting in your car and you don't really have an exact destination. You might emotionally go down all different kinds of streets because you have no real fixed destination. Do you like the fixed entry and exit, or do you like it a little loosey-goosey? Or
No, never loosey-goosey. The specific patterns that I teach have specific entries that can be monitored well before they get there. And so, and then of course the risk management's already in place. So I teach traders also how to use bracket orders, because it's a great tool to use for the type of trading. So once the trader can put the entry in ahead of the price getting there. And then if it's triggered, then their stop loss and their exits are already in the market. Then they have nothing else to do.
You're going to really try to help people, not put too many markets on, not put too many positions on, and then have a fixed in and out, so that, no one trade is going to really kill their bankroll.
Yeah, it should never be. If a trader is upset 3 days later about a trade that they had 3 days ago or a week ago or a month ago, something is really wrong. It should be, you should get to a point in your trading where it's just your inventory. You're just moving your inventory in and out. You don't think about it. You just record it and you move on to the next setup. And that's it. It's nothing. It shouldn't be any big, even on the good wins. It just move on to the next trade. You should forget your big wins.
It's almost like the baseball
faster.
guy. It's a baseball player who one at bat is his live or die moment, as opposed to knowing that he has 500 at bats coming up, and one at bat is not going to be his career.
Yeah, I mean, baseball is sports are great analogies to
Right.
trading because they're dealing with the same types of emotions. And
Yeah.
even as teams, the team, I'm in the Seattle area or Seattle Seahawks. I think they experienced some collaborative emotional issues in
Right.
the games this year,
Sure.
probably maybe stemming from Russell Wilson and the injury that he had.
Right.
But I think it was a collective, thing. And
Yeah.
I think they have to get their mindsets right in order to get back in there and be winning.
And be
because they
successful. Yeah.
Yeah, because they certainly have their plan, right? I mean, they wouldn't go into a game without some type
Yeah.
of a plan. So why would we approach the markets like that? That's crazy.
Exactly. That's perfect. Wally, let's hear what you are doing for people and why it makes a lot of sense for them to check you out and see what kind of value you bring to their situation.
Yeah, absolutely. Thank you. So at Right Side Trading, actually this Saturday coming up, we have a workshop that we do as a 6-week long workshop done once every Saturday for 3 hours. And what we do is we teach people how to read the data that we see. And one of the things I try to tell people is I don't hope, wish, feel. I need to see data and learn how to trade based on data. Emotion scares me. So for that reason, we focus on candlestick analysis. That's one of the technical things that we do. And we've broken down from my studies candlesticks down to a very few that we see work very, very well, which when you see that, it tells you the story. In accounting, they have a thing they say numbers tells you the story, okay? And numbers don't lie. I found that to be very, very similar to candlesticks, the way we use candlesticks, that they tell your story. And once you're able to interpret those stories that it's telling you, you'll see things a whole lot differently. So that's the first thing. But then we also go into, like I said, market bottoms. I've studied market bottoms. A lot of people don't understand just how market bottoms work with cycles and markets. And so when you combine those two together, you start anticipating things ahead of time. And it also the reason why we're able to stay on the right side. And then we also go into IPOs. That's one of our bread and butters.
Sure.
How to tell which IPOs are going to do well from the ones that are not. We've traded multiple IPOs like Roku when they went all the way high, Ferrari, Alibaba when they first came out, knowing when to jump into these IPOs that would double, triple, quadruple in prices is very key. And again, the beauty of all this is it's not about, oh, I have a gut feeling or I have this emotion, so I have to go check anything. It's just the data in front of you. I always tell people, I say, once you understand how to read the data, then you should be able to write that down, pass that on to your spouse, and have your spouse literally trade off of that same information that you wrote down without them knowing anything about the market. And then have your children or your grandchildren supervise your spouse. Because that to me is a system, and that's the whole idea. It's like when you have a system, a system is not based on, just human judgment. It's based on rules. And so you want rules that apply over and over and over. We've been picking tops and bottoms, left and right, every single month, every single quarter since 2016 when I started developing this stuff. And so we teach people that so that way you know when to jump in, you know when not to jump in, you're not panicking, you see things for what it is. So needless to say, and a whole lot more to that, it's what we teach for 6 weeks, because I feel like, just learning something over a course of a weekend for a couple of hours is not really going to give you a full perspective of what's going on in the market. And the reason why we do 6 weeks is that way you'll see everything. You'll see volatility. You'll see markets going in range. You'll see trend in markets in typically a 6-week period. And you'll see reversals taking place, knowing how to tell when the market is topping out, knowing how to tell when market is bottoming out and all that kind of stuff. So it encompasses all that in real time so that we can learn how to approach the market in all circumstances. And so anyways, that's what we do. And again, like I said, we start this Saturday. For those who might be interested, they can go to our website in rightsidetrading.com /6 weeks program. 6 weeks program, number 6 weeks with an S program. They go in there, they'll see that. Join us, and I'll show you things where it's like, I always tell people, I said, don't even take my word for it. Let me show you the data, and then you go check it out for your own 2 eyes and see whether or not it makes sense. And that's kind of what we do.
Perfect. Well, thanks everybody for being here. As far as Option Professor is concerned, we have 5 PDF reports that we put together for income, growth and value, international investing. But more importantly, we've got one for options, and we have one that in the options area that includes all the best stocks we see in the high growth areas looking forward, like the cloud, semiconductors, AI, cybersecurity, 5G, and EV, biotech, and all the different ones. We think there's a lot of potential down the road. So we offer that as well. So if you go to optionprofessor.com, you can get those PDF files and we can get those out to you. All right. I want to thank, of course, everybody who's been here today, and Alaina, Wally, and Leslie. I think we gave a lot of good information out. People can check out everything, the email and the contact information David's putting up on the screen right now. And until we talk again, everybody, thanks a lot for being here. And I'm going to send it back to David now. Have a great day and great trading, everybody.
Oh,
too,
thank you.
too.
Have a
Thank you.
great day.
Thank you, guys.
All right, thanks everyone. Ton of good info discussed today. So just a quick reminder, be sure to subscribe to Timing Research on YouTube or your favorite podcast app. Also, you can just go to TimingResearch.com to get access to the recording of this episode as soon as I can get it posted. Also, everyone on today's show did a presentation for last week's 2022 watch list event. So if you just go to TimingResearch.com and scroll down a bit, you can see all the presentations, there from that event. We did 24 presentations last Monday and Tuesday. So a lot of good info there as well that you can check out. So just want to thank my guests again for today. Wally Olopade of RightSideTrading.com, Alaina Nicole of OptionsBay.com, Leslie Jouflas of TradingLiveOnline.com, and the Option Professor of OptionProfessor.com. Thanks, everyone.